In this video, we're going to talk about the auto insurance coverages that you need for your nonprofit program. And the way I'm going to break it down is what's the difference between your own vehicles versus your non-owned vehicles. Let's talk about your own vehicles first and go through some of the key coverages that you're going to need. For an owned vehicle, the baseline coverage is liability insurance. It's damage that you cause to other people. It's property damage you cause to other people. It also pays for injuries for people that are in the car for you. So this is a big deal if part of your programming is transporting people to and from appointments, transporting youth from the school to the child care center, or transporting a client from their residential facility to the counseling center or to the day program. Liability insurance is what's going to pay for the bodily injury if somebody gets hurt in your vehicle in the accident and you're negligent. Comprehensive and collision talks about physical damage to your vehicle. Collision is what pays for if you were in an accident and you were at fault, it covers your vehicle. Comprehensive literally means all other. It's everything else. Can be flood, can be theft, can be a deer runs into the side of your vehicle. All these things are considered comprehensive. And then a couple of other things that you'll want to look at would be things like towing coverage. You know, if you get in an accident, you're going to need to tow your vehicle away from the scene. You're going to want to look at rental reimbursement coverage, because if you don't have your vehicle, you're probably going to need to rent another one. So there you go. Now let's talk about non-owned vehicles, vehicles that you don't own but you still use. Nonprofits, in my mind, are notorious for this, especially if you're something like a Big Brothers Big Sisters or a Meals on Wheels, or you're any type of program that relies on your volunteers to deliver your programming, whether or not they're a literacy council and you're going to go and sit down and help somebody learn how to read. You're just meeting them at the library. Or if you're Big Brothers Big Sisters and you're transporting clients, you're transporting youth as part of a mentoring program. Hired auto liability pays for liability insurance in a rented vehicle. Non-owned liability insurance pays for liability insurance that in excess of a vehicle that is not owned by the business. Usually we're talking about employees or volunteers' vehicles in this particular situation. It always acts secondary. But it's really critical to think about in a nonprofit scenario, because a lot of times that's your fleet of vehicles. You rely on that fleet of vehicles in the same way as if you owned them. You have to have different housekeeping practices. You need to make sure that if you're going to allow someone to drive their personal vehicle, that they carry auto insurance, and you're making sure that they have sufficient auto insurance limits, because that's the first buffer. And a lot of insurance companies, they're not going to drop down under $100,000. You're going to have to come up with $100,000 one way or another. It's just a matter of if an insurance company is going to pay for it or you're going to pay for it. So there you go. Two key ways to think about auto insurance in a nonprofit environment. One is owned vehicles and one is non-owned vehicles. If any of this has you asking questions about your program and your broker relationship, and you'd like to talk to somebody with experience in your field, please reach out to us at www.bitnerhenry.com. I'm Daryl Henry with Bitner Henry Insurance Group, and we serve those who serve others.